On the morning of September 16th, 1992, the world was still asleep, unaware of what was coming. On the 33rd floor of a Manhattan skyscraper, one man had been awake for hours, waiting. His coffee had gone cold, but George Soros wasn't thinking about coffee. He was thinking about London. On his desk sat 3 phones, a flickering terminal, and a note he had written to himself. 4 words, written the night before, at the end of 2 years of quiet, obsessive preparation. Outside his window, Manhattan was beginning another ordinary Wednesday. It would not stay ordinary for long, because this was the morning Soros had chosen to do something the financial world had never seen. He was about to place the biggest currency bet in history and walk away with $1 billion. This is the story of Black Wednesday, the day one trader broke the Bank of England. But to understand what Soros did that morning, you have to go back 2 years earlier. It was 1990. Europe had a dream: to unite its economies under one shared financial system. That system was called the ERM, the European Exchange Rate Mechanism. It locked every member country's currency into a tight band against the German Deutschmark. The idea was simple: stability, integration, and a shared economic future for the continent. Britain joined. The pound was pegged at 2.95 Deutschmarks, and it could not fall below that. On paper, it looked strong, solid, the kind of policy that makes politicians feel very proud. But underneath that confidence, the British economy was quietly falling apart. Unemployment was rising, growth was collapsing. Businesses were suffocating under high interest rates. The pound wasn't strong. It was being held up artificially, like a dam full of invisible cracks. And while everyone else looked at the dam, Soros spent a year studying every single crack. Quietly, his quantum fund began borrowing British pounds, billions of them, and converting them to Deutschmarks. It was called a short position, a bet that the pound would fall. And he was building it in secret. By September 1992, his short position had reached $10 billion against the British pound. $10 billion. And almost nobody in the world knew this trade even existed. By the second week of September, the cracks were beginning to show. Traders across Europe were beginning to feel what Soros had felt months earlier. The pound was wrong. They were selling pounds. Not with Soros's conviction, but they felt it too. The Bank of England was fighting back, buying pounds by the billions to defend the peg. But every pound they bought cost them foreign reserves, and foreign reserves are not infinite. Then, on September 15th, the evening before, Soros received a phone call that changed everything. His chief strategist told him, "The Bank of England is bleeding. The pressure is accelerating." The strategist said, "I think we should double down." Soros didn't hesitate for even a second. That night, the quantum fund increased its short position from $10 billion to $15 billion. $15 billion. Betting against the British pound, the largest currency trade ever placed. By morning, every phone on his desk was ringing. The market could feel something coming. At 7 in the morning London time, the pound opened under immediate and violent pressure. The Bank of England pumped over £2 billion into the market in the very first hour. The pound steadied momentarily. For one brief hour, it looked like Britain might actually hold. The Chancellor of the Exchequer went on television. Britain would do whatever it takes to stay in the ERM. Interest rates were raised from 10% to 12%. An emergency measure in broad daylight. The market paused. For exactly 1 hour, the world held its breath. Then the selling resumed, and this time it was a flood. By 11 in the morning, the Bank of England had lost control. The pound was in free fall. In a single day, interest rates were raised again, this time from 12 to 15%, the highest interest rate in modern British history. And still, the pound kept falling. By 2 in the afternoon, the Bank of England had spent £27 billion in reserves. they had nothing left. At 7:30 in the evening, Norman Lamont walked back out in front of the cameras. His face said everything. Britain was withdrawing from the European exchange rate mechanism, effective immediately. The pound was released into free float, and within minutes, it dropped 15%. In the space of one trading day, an entire country's economic policy had collapsed. George Soros did not cheer. He did not call anyone. He simply sat in his office and waited for the numbers. His trading team began processing the positions. The calculations were starting to come in. Every pound borrowed at 2.95 Deutschmarks, now being bought back at 2.50. The difference, multiplied across $15 billion in positions, was staggering. The first number that came through was $100 million, then 200, then 500. Then the final number arrived, and the room went completely silent. $1 billion, made in a single trading day. The most profitable trade in financial history. Some estimates later placed the final figure closer to $1.5 billion. The next morning, the British press gave it a name. They called it Black Wednesday. The day Britain was humiliated. The day one man walked away with $1 billion. They called him the man who broke the Bank of England. And the name has never left him. But here's what the headlines never told you. Soros didn't make $1 billion in 24 hours. He made it by being right for 2 years, while everyone else was too afraid to act. He understood something fundamental. Markets are not always rational. Governments are not always right. When reality and policy collide, reality wins. Every single time, without exception. Soros studied the British economy when it was boring, when there was no crisis, when nobody was watching. He sized his position when the conviction was clear, not when the crowd finally confirmed it. He held a $15 billion position while governments threatened, while journalists called him reckless. And on the day the world was watching, he simply collected what the market owed him. The greatest trades in history are not made in a day. They are recognized in a day. They are built over months of research, patience, and conviction. Most people are not willing to maintain. The Bank of England lost £3.3 billion that day. George Soros made $1 billion. Same market, same information, same 24 hours, different levels of preparation. On the morning after Black Wednesday, a journalist asked Soros if he felt any regret. He said, "When I see a wrong, I try to correct it. The market corrected it. I simply participated." That is the difference between the traders who change history and the ones who simply watch it happen.